So, I mean, just to start us off, why don't you just tell us quickly a little bit about yourself, how you got into the insurance industry, and why you chose to stick with it.
So, Brian Bixby, I got into the industry 21 years ago. Started off in the financial products area. Out of college, I thought I wanted to do marketing. Got offered from all of the big ad agencies down in New York City. I was pretty excited about that until I actually saw their offers and said, how the hell do you live on this? And they explained that you got to have 6 roommates in New York City for the next 2 years. And I said, well, this is definitely not for me. Started looking for different positions back home. Financial services had always interested me through college. So I started off with Ameriprise Financial Advisors. I was the advisor of the year and ended up leaving there after about 12 months, maybe it was like 13 months. And I had signed a non-compete, which is very important to this day, because even though I didn't have a clue what the hell I was signing at that point, I had signed it, and that's my word. So I had to move on from the financial services industry, but I wanted to find something similar. And this membership sales position opened up with the association, and came in and met with Jamie Depot and Lisa Lounsbury, and it seemed like a perfect fit, very adjacent, very similar to what I was doing. Could kind of keep one foot in the financial services area, and thought I was going to be able to maintain my licenses. That didn't end up working out, but found something better that I truly enjoy in the P&C side of things. Ended up transitioning out of membership and into the insurance side of the house here at the association.
Very interesting.
How long have you been with the big guy?
21 years.
Okay. So walk us through kind of what does an average day look for Brian?
An average day contains a lot
Shawn
of
calls,
a lot of emails. A lot of emails. We've been transitioning management systems, so that's been taking quite a bit of time to make sure that we've got the systems and the checks and balances and the reports built out that we want to be able to run so that we can be as efficient as possible. Working on a lot of member questions, quite frankly. So Shawn mentioned occasionally we'll get an E&O call, and I love those. It really, errors and omissions for insurance agents is what I love to talk about. It's what I love to do. It's my favorite product by far, probably only followed by cyber after that. I like EPLI and D&O and what have you, the other kind of claims-made policies, but really try to focus most of my effort from an insurance standpoint on the claims-made products. When it comes to personal lines, I'm very dangerous, and there's a good reason I have a pretty darn good personal lines agent, and I do whatever the hell they tell me to do.
Yeah, and Brian, from just for those of you that don't know, Brian helped me personally with my E&O policy, and I don't mind saying it, Brian. I mean, my first E&O policy, which I guess fit my needs for when I first, just opened up the agency, but it was, by all matters, a cheap policy. And when I said it to Brian's like, hey, what type of work do you do? And I tell him, personal and commercial. And I can't remember if this is exactly how it went, but it went something along the lines of, hey, do you know your E&O policy excludes any policies you write for workers' comp? And I was like, what? And then everything changed from there. So, listen, I'm an expert in my niches in some commercial and personal lines, but when it comes to insurance agents, E&O, and if you are a member of the Big I, use Brian as a resource, because Brian, you helped me immensely with that. And then now I think we switched over to the product that you guys are using, which has been super helpful. So just wanted to let you know I appreciate that.
Thank you. I definitely appreciate the feedback. We try to help agents, whether they're members or not. some agents just starting out, we've got a ton of resources, and they look at the price tag and they don't understand all the value that comes along with the association.
Yeah.
So it's from my standpoint, most of those agencies that I talk with a year later are like, Brian, thank you for convincing me to do that. It was so worth it. But occasionally our product just is not the right solution, and we're owned by our members. So at the end of the day, we don't have to, I never have conflict. I don't have to sell a product that is not the right product for the agent. I can say, hey, look, you should go here and buy this or what have you. But Shawn, that product that you were on originally, that is a good fit for some agencies. Yeah. And if you're a small personal lines agency, that might be the product that I tell you ultimately to go buy. Yeah. But we're gonna check it out and see. We're probably gonna ask more questions than other people do, so that we can make sure that we're getting to the right product for you.
So I want to echo what Shawn said just about you, Brian. I worked with you as well to get my E&O set up. Highly recommend, and just everybody at the Big I. In the short couple episodes we've done this podcast, a theme has been to find people in whether it be mentorship or to find people in different avenues that you need a resource. And for me, it was, I know I want to start this agency. Where the hell do I start? Like Carly said, you got to talk to these people at the Big I, and it was, okay, hold on here we go. And between you and Christine and a few others there, it was just, let's go through this process. You got to do this and that. And I tell the story to agents all the time. If it wasn't for the Big I of New York bringing me through those processes and helping me understand, here's the most important part, helping me understand what I'm doing, I don't know if I would have, stuck the course to continue on with a scratch agency, because especially in the lovely state of New York with the different rules and regulations that we all have on this call here and we all love. But Brian, from an E&O standpoint, what are a few things that scratch agents should look out for, right? When we get excited to start our agency, we're excited to get the ground running. The exciting things are the logo, the office space, right? All of these things. Nobody gets excited about setting up your E&O policy because, again, maybe they just don't know about it or the loopholes that you and Shawn talked about. But if you had to break down a couple key things, what would be those key things to take a look out for?
First, from my perspective, is going to be, to steal a phrase from Tim Dodge, RTFP, which is read the bleeping policy. And that should be the foundation of anything any agency is doing. So if you're going to sell a product, you should understand what's in that product. So read the policy. That will help you immensely in having proper conversations with your prospects and your insureds, because you're going to understand what is in the policy and what is not in the policy. And that's very important to make sure you're avoiding E&O claims. It's probably the biggest piece that drives E&O claims is failure to place coverage. But probably one of the second biggest places is going to be the situation where you're writing a policy, but you don't understand what you wrote and you've explained it improperly to the customer. So those are probably the top two areas that really kind of drive claims.
Brian, when you say failure to place coverage, dive a little bit deeper into that.
Yeah, so this would be where somebody asks you to purchase a general liability policy for their office, and you just don't place it. And it's literally the biggest area. I think it's like 15 or 16% of total claims come out of failure to place, and then a recommendation error is like north of 14. It's like 14 point something percent of all claims are recommendation errors. So between those two, you've got 30% of claims that are happening on the E&O front.
Okay, so how would an agent protect themselves from a failure to place coverage standpoint? Would it be you having to send them like a written request saying, hey, we don't have a carrier for this specific type of risk, or is that enough?
Yeah. So if the agency knows that they're not placing the coverage, that's really a good position to be in, because then you can handle and address that. So you can send a close letter at the time that you're done working on your file. You can say back to the customer, hey, look, we've not placed coverage. We're closing our file. We haven't heard from you, yada, yada, yada. So that's one way to take care of that issue. The alternative side of it is the agency thinks that they've bound coverage. Let's say there was a subjectivity on a quote, and they missed that subjectivity, and they provide all the documentation, and it all goes up there, and then now there's a delay, and the customer doesn't provide the stuff, and there's a loss, and there's no policy in place. That's going to be a problem.
Okay, and when you say I'm trying to dive real deep here now because I'm just thinking about myself. When you say closed letter,
sure,
is an email enough?
I think so. As long as that's your practice and procedure, and you're retaining your emails
and you're documenting
and you're documenting your file. One thing that a lot of agencies don't do is get a written letter from the customer saying, hey, look, we're agreeing to do business electronically. That's one of the things that I highly recommend going out with the application. So send that, hey, we're agreeing to do business electronically with the app. And that way, everything from that point forward is documented that you're able to communicate electronically. You can deliver your policy electronically. You can deliver endorsements electronically. And that's in your file already. You're going to be in real good shape with that.
Interesting. Okay. And then as far as the recommendations, you said that's another big common E&O claim. I'm assuming something agents can do to protect themselves is have like a decline coverage letter or something along those lines.
Yeah. And decline coverage letter is great, but a different type of a proposal is even better. I generally suggest you not make any recommendations, but provide options. You're basically in the same exact scenario with your customer, but you're not raising your standard of care. When you provide a recommendation, that means the customer is probably going to rely upon you. That's what I want my personal lines agent to do, is to give me recommendations. So if anything does hit the fan at the end of the day, I can go, I did exactly what you told me to do. This is your fault. Whereas if he gives me a bunch of options, he's like, hey, look, you can buy a $5 million umbrella. You can buy a $6 million umbrella. Here's a $10 million umbrella. And if I'm not buying the 10 in that situation, he's sitting back going, I'm all good.
Yeah.
So even from that standpoint, when it comes to limits, it generally benefits you to provide a variety of options. Let's say your customer is never going to take a $10 million limit. Give it to them. Because at the end of the day, when they have a claim that is $3 million and they bought the $1 million policy, you're going to be sitting back going, I gave you the $10 million option. Why didn't you go with it?
Yeah. And some carriers will give you the quote with the $1 through $10 million option limits. So, yeah. What is an insurance agent looking at price-wise? I'm assuming if it's a failure to place the coverage, they have to pay for defense costs and whatever else. I guess it depends on the claim. So
the claims costs really vary widely, and you can part of the problem right now is we have very bad juries. I had a recent claim that was not even my claim, but it came up in Connecticut, where the fact pattern was basically perfect for the agent. The agent had documentation in his file that the other structure, which happened to be a barn, was okay to be insured at 10% of the primary structure. 10 years goes by, 10 policy periods go by. The insured admitted on the stand that they received the policy, that they read the policy. How about that? So now we've got a customer of the insurance agent saying that they've received the policy and they've read the policy, which contains the 10% limitation on the other structures. And you also have contemporaneous notes in the producer's file that state barn fine at 10%. So pretty cut and dry case, right? Like this is a no-brainer. You're gonna walk away, and this thing's gonna be completely in favor of the insurance agent. Nope. Yeah. The thing went entirely the other direction. The jury found in favor of the plaintiff and gave her an additional $150,000.
Wow!
So that was damages on top of the probably $80,000 in attorney's fees to get to that point.
So it's very likely that having a claim, if you don't have the right coverage on the E&O standpoint, is probably going to put you out of business if you're a newer agent.
Yeah.
Would that be fair to say?
Yeah, that's very fair to say. The other area that we see a lot of times are agents that are starting up are taking retentions that they don't need to take and are not sensible from a reduction in premium standpoint. So
gotcha.
An agency that's just starting up with a big lack of resources that is kind of just squeaking by, they're like, all right, I'm going to take a $25,000 retention. And when they come to me, I'm like, no, you're not. Like, you're going to save $12.50 on your E&O policy by taking a $25,000 retention. Why on earth would you do this? So that's one of the mistakes that agencies make starting off. They're trying to save every nickel, but sometimes it doesn't make sense to do so.
Gotcha. So we just walked through kind of what happens if you don't have a policy, but let's brush on quickly if you do have a policy. How does that work? So if we just basic terms say failure to place coverage, let's say you forgot to put collision on a car that you're supposed to put collision on or something like that. What is from the point that us as an agency realizes, oh boy, there's a mistake here. Yeah. How does that look?
Yeah, the minute that you think that something is going down, highly recommend communicating with us, touching base with us, telling us, hey, look, this is what's happening, and we can look at it and say, yes, this looks like it's a claim, or there's absolutely no way in hell that's a claim. So those are those kind of things. If there's any chance that it's an E&O claim, we're going to put it in, and quite frankly, our main E&O carriers, they all look at it and they go, hey, look, this guy, he's got 20 reports on his policy. So if you're not an E&O underwriter, you're looking at that and going, 20 reports, holy cow, I need to be careful of that guy. No, that's an agency, quite frankly, that the underwriters look at and they go, this guy is very cognizant, very careful, understands what is going on within the agency, and he's very cautious and lets us know every time that there might be something going on. And they look at that from a very positive standpoint for the most part. There are some carriers out there that look at that and lose their mind. Generally, those are not the high quality carriers that have been doing insurance agents and brokers for a very, very long time. So once you let us know what's going on, we utilize Kydell, Weldon, Cunningham as our primary resource. So we will work with them primarily to work on your defense. And most of the policies that we sell, your deductible is not going to apply unless you have an actual claim against the agency, an actual finding of liability. So even if we have defense costs that could amount to $1 million or $100,000 or whatever, because typically defense is outside of the limits on most of the policies that we sell. That's another differentiator between us and some of the
huge difference,
tinier carriers that are out there. But most of the policies that we sell, defense is outside the limits. And then in addition to that, we also have the deductible only apply if there's a finding of liability. So you could spend $100 million on defense costs because theoretically defense is outside the limits, right? But it's really not. I can talk to you guys about that for a long time. It's within the indemnity limit. So once the indemnity limit is shot, there's no more defense costs on these policies for the most part. So, but with that said, the attorney's fees are generally paid for by the carrier, and we're very fortunate in New York to have Kydell, Walden, and Cunningham. They're as far as we know, they're the only firm in the country that specializes solely in insurance agents and brokers defense work. Most of them they'll dabble, so they'll have like one attorney that'll do E&O work. But these guys, that's all they do. That's what they do all day long. They specialize in the insurance agency world.
Good to know. Stephen, anything you wanted to touch on E&O before I move to the next?
No.
Okay. All right. So, Brian, one thing I feel like we had to talk about with you, too, because it's helped my agency immensely, is the IMS access product. So why don't you touch on that a little bit and how that can help newer agents?
Sure. Well, Shawn, I think it can help newer agents. It can help older agents. It can help.
It's true.
It can help medium-aged agents. It just generally can help agents and brokers across the scope. Now, it helps each one of those categories kind of in different ways. So Independent Market Solutions, imsaccess.com, we're in 17 different states. Basically, what we provide is market access to independent agents, and we do that on a direct basis. So we connect the agent with the carrier directly. We are not looking to be stuck in the middle. But we have programs that are with your standard companies. We just put on Chubb in New York and Connecticut. We just turned that on. We've got Travelers. We've got Progressive. And one of the cool things with all of these guys, any profit sharing we earn from any of our carriers, at least 50% of any profit sharing goes back to the writing agency. And as long as they've got a profitable book of business, right? So the guy that's really hindering our ability to get profit sharing, he's not gonna be receiving profit sharing. His portion will be split amongst the other agents that are actually profitable. So that's a nice piece. Some of our carriers were on like the third or fourth tier of profit sharing with them. So even and one thing with IMS is once you hit thresholds with the carriers, you can go directly to them, and we just ask that you remember us fondly. There's no hooks, none of that. That happens January 1st of each year, where you can graduate. But sometimes it doesn't make any sense to transition. So let's say you're a Progressive agent with $300,000 of production, and you could go directly. But we're on the fourth tier of profit sharing with them. So, and you're a profitable agent. So why on earth would you go directly to a position where you're not going to basically be qualifying for profit sharing at all and forego all of that? So, so we have those conversations. We've got some little niche programs. One of my favorite is Prudent Pet, which is this kind of program where the agency has to do no work at all. They sign up with Prudent Pet. They get a link. They can put it on their website, on their social. Their customer goes there. They talk directly with Prudent Pet. They are experts when it comes to pet insurance, and they know what the policies are, and the customer service out of them is excellent, and it makes you look great, and you get paid 18% commission new business, plus you get renewals on that. So people are like, well, why do I care about that? That seems like a smaller premium. So the premium is about what a personal umbrella is. And then most people are buying two policies because they have multiple animals. So now not only are you getting another personal umbrella, you're getting two. And then on top of that, you did no work. Brian,
I have the link set up with Prudent Pet. I'll be honest with you, I haven't done anything with it, but I got an alert the other day like, hey, someone purchased a policy through your link, and we're transferring $40-something to you. I was like,
oh, there you go.
It was like 8 o'clock at night. I'm like, oh, that's cool. I didn't even do anything.
The best $40 you ever made.
But not to mention now they're in your ecosystem.
Exactly, right. And you could almost use it to lead into the other lines of business.
And one of the things for those guys that are out there that are kind of specializing in the affluent area, if you leave that open, animal lovers are nuts about their pets. They're crazy.
Mm-hmm. Yeah.
And if you don't fill that need that they've got, they're going to fill that need outside of you. And that's going to leave that door cracked open, to Stephen's point, to another agent coming in and stealing your whole enormous personal lines account.
Yep.
Yeah. Yeah. And Brian, before we forget about IMS Access here, besides the higher tier profit sharing that you might get, you also could get access to higher commission percentages as well, right?
Yeah. So with some of our carriers, Shawn,
Okay.
some of our carriers, you're probably giving up some commission.
Okay.
But the one thing I will say around that is we are very transparent about
Gotcha.
our commissions.
Yep.
We make sure that you know what you're going to be getting paid. Anywhere the carrier will allow us to, we post those commissions right at imsaccess.com. So we
Okay.
put them right up so that the entire world can see. The only time we're not putting those up is because of the carrier telling us, whoa.
Gotcha. Yeah.
Hey. And generally we push that pretty hard with them. But we've definitely gotten some pushback from some of our carriers. So if you're seeing no commissions on our page, if it's got kind of random feeling type thing, language,
Then reach out.
That's because of the carrier has told us, we're not allowing you to put that up there.
Gotcha. And the agency owner owns their book of business, right?
Absolutely.
It's their name on the policy and everything.
So their name is on the policy anywhere that our program is a carrier program. Some of our programs are MGU programs. So in those situations, generally the MGU name is on the policy. But typically any of our direct carrier programs are going to have the agent's name right on the policy. And it's always the agent or broker working directly with either the MGU or the carrier directly.
Yeah, it's
And
huge.
this is available to agents outside of New York?
It's available. We're in 17 states, Stephen, right now. So the only hook, everybody goes, well, what is the hook? Well, the only hook is you need to be a member of the Big I in whatever state
Gotcha.
you're happen to be located in.
Gotcha.
Yeah. Which you're
Very
silly
good.
not to be a part of.
Yeah, Brian, as we look to wrap this up here, why don't you give the and I think Shawn and I kind of already did to a certain extent, but give the pitch of why being a part of the Big I in your community or your state is so important. You know, what's past what we talked about getting going and the help with the E&O and all that? What are more of the value adds that really can help you from day one of joining?
Well, certainly we have products and services, and being the head of that side of the association, I certainly don't want to talk down about those. They're very important. But the real work that we do is supported by those products and services that we have and offer to and through our members. It's the lobbying and advocacy work and working to put things in place to make your lives easier, to comply with Reg 500, to comply with our lawsuit against 187, which was expanded the kind of the duty of care for life insurance and annuity sales. Unfortunately, we weren't successful in that one. But every single day we are fighting and advocating on behalf of the independent agent. And sure, you could be a freeloader and sit back and go, yeah, I get that anyway. Why do I want to pay for it? But at the end of the day, the value that we bring to you as an agency is vastly outweighed by the small cost of being a member of our organizations.
Great. So Brian, first, anybody listening that wants to check out, stuff about the Big I, maybe Big I in New York, or just get in touch with you, what's the best way to do that?
Well, I would start with our website, biginy.org. Certainly can email myself, bbixby@biginy.org. We're also managing Connecticut, so you can reach me at biginy or bigict.org as well. We're here to help agents kind of do a lot of the dirty work. So if if you have questions on something, before you go doing a ton of research, call us. We have a research department. We have consultants on hand that we have available that you can hire. There's a ton of things that we do for agents and brokers. The key is to just ask.
Yep, exactly.
Yeah.
And I think just in my experience, like, it's important to focus on, especially from starting an agency from scratch, what you're good at and where your strengths are at. And, the paperwork pushing and getting things set up was not certainly my strength. I was just wanting to get out there and write business and get things going, as I'm sure every scratch agency owner would be. But having the resource of you guys was priceless. So thank you again for what you guys do. Well, Brian, thank you for joining us, everybody. That's another episode of the Scratch Agency Podcast. Thank you for joining us today. Do us a favor, like the show, share the show, and subscribe. Most importantly, remember to dig down deep, believe in yourself, and own your own future. We'll see you next week. Take care.
Thank you so much for listening or watching that episode of the Scratch Agency Podcast. We really hope you enjoyed it. We hope to see you next time. If you have any questions, you could reach out to myself or Steven on Instagram or LinkedIn, and we'll see you next week.